Adobe just announced Q4 earnings after the bell, and I am seeing shares of Adobe absolutely tanking. Earlier in the day, shares of Adobe closed at about $550 per share. I'm seeing in the after hours, we have slid down 7.5% on this one. Big drop in Adobe. We got a lot of lines on this graph. We'll clean it up. Can you step in and buy Adobe? This is after the company announced those Q4 earnings. Now, year to date, shares of Adobe down about 8%. Over the past year, down about 12.5%. You stretch this out to 5 years, it looks a little bit better, although this is a technology and software stock, up 81%. Certainly keeping up with the markets in some cases, but lagging behind mega cap tech and technology in general. Now, revenue in the Q4 came in at about $5.6 billion. That was 11% growth year over year. Now, one of the reasons why the stock is dropping is the company gave guidance not only for the upcoming Q1, we'll talk about that here in a moment, but they actually gave us entire year 2025 targets as well. The revenue is expected to be $23.3 billion up to $23.55 billion. Many of you are probably wondering, what was Wall Street's expectations for the upcoming year? Well, at the current time, it was $23.8 billion. The low end was closer to about $23.44 billion. So more or less, the company is actually coming underneath kind of the midpoint, even under the low end guidance, if you look at Adobe's low end. Now, also worrying is the company gave us Q1 guidance of $5.63 billion up to $5.68 billion. Again, Wall Street expectations for the upcoming quarter was actually $5.72 billion. The low end was at $5.66. The high end was up at $5.8 billion. So the fact the company is coming underneath the Q1 and also the fiscal 2025 targets set forth by Wall Street is having shares slide. Now, anecdotally myself, I have been buying Adobe software for probably longer than many of you have been alive. I remember using Flash and Macromedia and all the different products that the company has launched over the past 2 decades, probably 3 decades, that I've been using computers and designing websites and doing all types of stuff. I have found in the past Adobe's products to be indispensable, almost that they could charge me almost anything that they want and I'd almost have to pay. I've actually more recently cut down my spending on Adobe, and that's the first time I've ever actually had to done that. That is because there are other products in the marketplace that are either as good or in some cases better. Now, the company was negatively impacted by the fact that the United States government did not allow the company to acquire Canva, and so potentially maybe in a new presidential administration, although I am certainly not buying into this fact, but maybe you get a slightly deregulated environment and Adobe can go back on an acquisition spree. Look at that from a fundamental perspective when we look at the company's balance sheet. Now, total revenue in the most recent quarter, like we talked about, came in at $5.61 billion. That was 11% growth year over year, as last year you were sitting at about $5.5 billion or $5.05 billion. Now, the great thing about Adobe is they've still got these massive gross margins. You bolted on roughly $550 million worth of total revenue, and you come down here to your gross profit, and you basically bolted on over $500 million worth of gross profit. What I did notice, and what we are noticing across technology, is one of the places where you're seeing cost cutting is not in research and development. You do see it sometime in general administrative, but we see in Adobe's case, in both of those cases, we actually have a slight increase in spending there. Where I'm seeing cost cutting, you saw it at Meta, I think you saw it at several other companies. I can't remember them off the top of my head, but most of the tech companies I'm looking at are able to cut sales and marketing, but they're able to maintain a sales rate. Well, over at Adobe, that's not the case. They went from about $1.4 billion up to about $1.5 billion in terms of sales and marketing. So they have to continue to be aggressive. And like I said, there is competition out there from the other competing products. It's not just Canva, but there's other ones out there depending on what Adobe product you are looking at. Operating income went from 1.7 up to roughly $2 billion. You come down to kind of a net income number, paints a very similar story from like a growth perspective. From a cash balance sheet perspective, this thing was probably going to get blown up just a little bit, maybe debt, maybe some dilution for that Canva acquisition, which wasn't cheap. but we know that hasn't gone through. And so the company is sitting on a decent amount of cash, about $7.6 billion. In terms of current debt due, they have about $1.5 billion, and the long-term 3.6 up to about 4.1. Nothing to be overly concerned about. The company's always had a very healthy balance sheet. Now, from a cash flow perspective, during the last 3 months, it actually paints a really nice story. You went from $1.6 billion of operating cash flow up to roughly $3 billion. They basically spend money on nothing over at Adobe, so they continue to buy back the stock. And so, over the last quarter, they could have waited and got, an 8% discount after hours today. But look, $2.5 billion, that should continue again. Anecdotally, many of us creators are probably using Adobe software, maybe less than we have in the past, but they still have some indispensable products. Adobe Premiere, in my opinion, and their PDF product you pretty much need for the most part. So everything looks good with this company, but not good enough because the expectations were higher both on the quarterly and the full year basis when it comes to revenue. Now, from a technical perspective, we've got a lot of lines on the graph. We'll start to clean it up a little bit. There is a crystal clear area of support. I'll turn that to a purple line and kind of wiggle it around so you can see here. This purple line was resistance from August 2020 all the way till June of 2021. And when you broke out above it, it absolutely was a party. It acted as support back here in 2023. And the stock has chopped around this 505, basically where you're at in the after hours, kind of the low $500 level for the past year or so. This is a key area for Adobe. If you own shares of Adobe, it's not that you wouldn't really want it to break through 505, but there's areas slightly lower than that. You wouldn't want to break through 478. You break through 478, maybe even slightly lower at 450. This area, really anything above 450, that area has to hold. You break through that, and good Lord, there is not support for the shares until you get down into, there's some stops of the elevator, but you don't get kind of to the floor you're looking for until you get down into the low 300s on this one. So if you're trying to protect profits or trying to protect your assets with Adobe, these areas you're trying to really look for. Now, if you're slightly more aggressive, you're looking to buy Adobe, there are some interesting areas. We'll take these areas of support here so you can kind of see this. There's even some older lines that we can take these off that basically mean nothing. This green line, I'm going to change to purple. We were on this trend for a while. What you sometimes see is you're on a breakneck trend, right? Not quite a 90-degree angle, but it's a pretty steep angle on a trend. That gets broken down and it starts to flatten out a little bit. That could be the case with Adobe. So if you want to be aggressive, you want to step in, I guess this would be Thursday. Some of you guys be watching this Friday or even next week after earnings. You can step in here again with the idea. I would have a stop loss. Aggressive investors that want to be, that might not be the term, investors that want to protect their capital would buy here at $507, $500-ish. You would risk maybe $20 to the downside. You'd have a stop underneath these lows at 478. Slightly more risk taking is your stop is down here at 433. So you're risking about $70 to the downside with the idea you find support at this level, at this trend, and you start to move higher, potentially over these highs at 580, these highs at 640, and ideally you come back up here and retest highs back up at 690, which would be about $190 worth of upside with either $20 or about $70 worth of downside. That's the risk reward setup that you have technically with Adobe. That was Adobe's Q4 earnings. Now, folks, if you're a fan of the Investor Channel, you're a fan of my earnings analysis, I am proud to say, starting in the new year, we are going to regularly cover over 100 stocks every single quarter when they report earnings. So if you've been dying for more earnings videos, there's a lot of them coming. But the caveat is, you got to subscribe to the newsletter because there's going to be a major announcement coming very soon. If you want access to those 100 companies that we're going to be coming and covering and doing technical analysis and giving you buy points and stop loss, and we'll give you all this information, you need to subscribe to the newsletter. Currently, it is free. Find those links down in the description below. I'll send you an email over the next couple of weeks to give you details on how to access our earnings reports as we move into the new year. I will see the rest of you tomorrow here on the channel for Broadcom, and then obviously Friday for the FANG Saga recap show. Hopefully you guys enjoyed today's video. See you again soon, and good luck with your investments.